Hi guys, thanks for tuning in to another episode of Nuggets News. Well, what a week, one of the biggest in financial history. We've got so much macro news to get through, as well as all the crypto headlines. And then we're going to take a look at all the different markets, but we do welcome over 2,000 new subscribers. Look, thanks for choosing us as your trusted source of news, and particularly to people that have been sharing the videos lately. We know that YouTube doesn't necessarily push some of these videos about certain topics. So to get our interview with Raul, over 100,000 views in 3 days, is just awesome. Some of the people that have been reaching out to me and saying that we've helped them in one way or another, it's really fantastic. And look, continue to respect each other in the comments below. It's the number one rule in our group that we have to respect other people's opinions. But I understand why there's a lot of frustration out there, and we're going to get into that as well. If you haven't watched that interview already, I recommend you do. It's all timestamped, so you can skip to your favorite part, but it's very clear now, the way that markets are reacting, that this is the largest financial event in our lifetimes. Now, a lot of people are asking me, well, what can I do? We did a video on this on Thursday night. For those of you that are members in our group, you can head over there and watch that. We spoke about what stable coins you can go into, if you want to go into all cash, if you want to do that in a bank or hold that yourself, all the different options. And on Friday, markets absolutely tanked. So we'll be doing those things more regularly, and I'll jump on live whenever there's these crisis situations for our members in particular. Now, for those of you that are asking how to protect your portfolio, last week I did that tutorial about how to use options as an insurance or a hedge in case we fall lower. Now, if you're not comfortable with how to short the market and make money on the way down and use that as a hedge as well, I've also done a tutorial on that. So I'll put both those tutorials in the description down below. That's very easy to do on FTX. Final thing to mention, we've got that daily thread. Please keep all the comments in the group on that thread. There's just so much happening every hour, getting new updates. It's been fantastic to watch you guys, decentralize the input and all the news of what's happening and get to the minute updates there. And we'll continue to do so. We do welcome 30 new members this week. It's fantastic to see people taking interest and I guess realizing that everything we've been talking about for the past few years is now coming true. Okay, so let's get into the local news where there's been a lot of frustration around the messages from our leaders. Scott Morrison was talking about how it's, just a bad flu a few days ago. Donald Trump's tweeting these statistics, and this does my head in how people are comparing these sort of numbers and playing it down. Just a week ago, Donald Trump said it's under control, telling people it's a good time to buy in the stock market. That's a couple of weeks ago now, and we know how much the stocks have tanked. So these people, the politicians getting involved that are not experts, it is just so frustrating, and I understand why people are confused and getting a bit scared as well. Now, in Australia, just like the US, we haven't been doing enough testing, in my opinion. Those criteria about only testing people that were overseas or in contact with a known case, it's just not enough. There's so many cases out there, and we're turning these people away that could be, carrying this and going back into the community. So that's frustrating from my end. I think we're going to see the numbers pick up now they start testing more people, particularly in the US. I think they're going to be really hard hit in the next 2 weeks or so. In terms of our leaders, not setting a good example, Peter Dutton tested positive. Look, he's been traveling around, he's been in cabinet meetings recently, and he's saying, well, some of these doctors are saying it's only 24 hours that you're contagious, so no one else needs to get tested. And Scott Morrison, our Prime Minister, saying he's not going to get tested. And then sure enough, we see his home or his residence being absolutely, hosed down and decontaminated. And how would the virus be alive on those surfaces if it's been days and days now? So, look, saying one thing, doing another. I do think we are going to see cases of our politicians that have been in contact with Peter Dutton, because on radio he said that he actually had symptoms on Wednesday and they had those meetings on Tuesday. So I don't know why those politicians would even risk it. Just go get tested. Seriously frustrating as a health professional watching this unfold. Now, finally, this afternoon, Scott Morrison has introduced some strict travel restrictions for all arrivals, but at the same time, keeping schools open, saying that we're not going to have these gatherings over 500 allowed. Well, my wife teaches at a school with over 1,000 students. Or if I go to a gathering with 400 people, how is that any different than 500 people? We need to be doing everything we can. It is very, very clear in the evidence, which we'll get to in just a second, that isolation is the key. Now, Trump also enforced these travel restrictions, and now there's a race to get home. And what we're seeing, I really feel for people in the US and these travelers that are abroad. 6-hour waits to get your bag, and then another 4-hour wait to get through customs. And these are in these shoulder-to-shoulder crowds. This is probably spreading it around more because of how tightly, how tight everyone is who have been travelers overseas to these different areas. And it's actually really starting to upset me. But anyway, so what can we do and what has worked? Well, it's very clear that these countries that have battled SARS and MERS in the past, they know how to go into strict quarantine, and it's a bit of a sacrifice in the short term. You have to self-isolate, do all the hygiene, those sort of things that I've been talking about for months now. Now, in Hong Kong, they closed all the schools, they did all that, and the community got behind it. Same in Singapore, Japan. They've got an elderly population. So this excuse that, Italy's only going up because they've got an elderly population doesn't hold true. And sure enough, South Korea, after the initial spread, they really put in some good measures as well. So as you can see here, anyone that tells you that it's just the flu, all you have to do is show them this chart. It's increasing at 33% a day. People aren't good with compound interest. Italy's at 10,000 cases. When you look at a week or so ago, down around 1,000. So it's done this tenfold, and we're seeing this doubling every 3 or 4 days, even less in some countries. So Australia is kidding themselves. They're patting themselves on the back, saying how great a job they've done, whereas they're sending out mixed messages to the community, and we still aren't closing schools and going into this isolation and quarantine, which you need to do if you want to stop this aggressive growth of this curve. And I think it's a cultural thing. A lot of people still are going to take it seriously as well. But again, that's all I'll say on that at this point in time. It's very clear how these measures work. A few cool articles if you want to check these out about the social distancing and the amount of difference that even just one day can make, and why we're waiting till Monday to do some things. And then I've heard rumors about waiting till Tuesday for others, but you guys will hear those announcements as they come out. Why schools should close, why we should quarantine these areas where we're seeing clusters. It just makes sense. At the same time, we've got Australia's chief medical officer coming out and saying that we're likely going to see 1.5 million people in Australia, just in New South Wales. Get this. Likely that 60 or 70% of our population and global population could get this. Now, yes, a lot of people are going to be fine, but why aren't we doing everything we can if that's the case, if that is what the medical experts are saying? We've seen the first case of a newborn baby contract this in the US, and we don't quite know yet if that was caught in the uterus or during the birthing process. So again, so many unknowns. But reading these messages from the physicians, the ICU guys on the front line, I've got so much respect for them. Hearing these complications, stories of people without any other underlying health conditions that are in their 20s or 30s that are having heart failure and whatnot. It's really scary stuff. So sorry guys, I'm going to have a quick drink. I've been doing so many interviews lately. I've got a bit of a sore throat, but hopefully nothing more than that. All right, into the wider economy and the news. So we're now seeing those second order effects that are going to hit our economy and all economies globally. So University of Tasmania, plenty of overseas students. They've slashed 75% of courses that they're offering. Australia's answer, this is some of the stimulus we've got. So some little boosts in there for small businesses and those that are unemployed or looking for a new job, pensioners and whatnot. But this is still nothing on the scale of the GFC when everyone got a handout. And when you have a look at what other countries are now talking about, again, Australia's 25 basis point cut and this little package is absolutely nowhere near enough. Now, on Thursday, we had our finance leaders come out and say that our banks are safe and they've never been, surer. And then the very next day, the credit markets freeze. Overseas funds start trying to dump Australian government bonds. and the liquidity dries up. So the RBA had to do the first time since the GFC their emergency repo market operations, which is what you've been reading about in the US, that start in September, and they say, oh, it's just a one-off, and now look at where the US are 6 months later. They've absolutely opened the floodgates, which we'll get to in just a second. And sure enough, it's no coincidence that here is the point in time. You guys can't quite see that, sorry, behind me there. Here's the point in time when they conducted that operation, injected that $9 billion, and what happens? Stocks finish up 12% off the lows at the end of that day after a bit of a bloodbath of a week. So once again, saving the financial markets, and that is going to cause a lot of frustration. And I think people are going to take to the streets if Wall Street gets bailed out again and the little guy doesn't get any help. This is absolutely scary, this statistic here. The average size of home loans in Australia increased by 20% year over year, outpacing even the house price gains. So at a time when there's a lot of uncertainty, people have been rushing out and getting bigger mortgages than ever before. And this data doesn't include those 5% down mortgages that they're now offering. So we could be seeing metrics even higher again. And the housing market, if you look at all the domain and real estate data, they're telling us that housing is fine. There's nothing to look at here. If you have a look at all the housing ETFs, they're all down 20 or 30, 40% in some cases. So I think you're kidding yourself if you think that there's going to be all these people with more money in their pockets, getting an increase, buying new houses when our economy is staring down the barrel of this for the next few, at least weeks or months. Mortgage payments have been suspended in Italy. How does that play out in other countries? What happens for the banks when they lose their mainstream? Australia's banks are so exposed and dependent on their mortgage books. What happens if we have to stop mortgage payments and our banks that are leveraged up and are now in all these bad derivative positions and have run out of credit? They've now lost their main source of revenue. So really scary stuff from all angles here. New Zealand, just a couple of weeks after they came out, like Australia, and said that negative interest rates, all this sort of stuff is really unlikely. And in Australia, it's still being called a conspiracy theory. And yet here we are, across the ditch, New Zealand have come out and said that zero or negative interest rate policy is likely in the next 2 years. We're going to have to change the rules around our cash system to prevent hoarding if interest rates get down that low. So this whole cash ban, again, show this to the people when they call you conspiracy theorists. It's now the central bankers that are telling you that they're going to have to look to change the rules because they don't want people to be able to not be stuck in the system paying those negative rates. And now it begins. The countries themselves asking for bailouts. So Iran have asked the IMF for a bailout, first time since the 1960s. This is a country that has been hit so hard by those oil OPEC wars, which I discuss in great detail in an interview that will be out next week with Resources legend investor Marika Tusa. So countries themselves are in a lot of trouble. The insurance companies, they are squirming at the moment. So this was a fantastic tweet from Wendell Potter, if you want to head over there and read it in its entirety. But basically, Trump came out and said that, I've spoken to the insurance companies. I'm going to make sure that, they're paying, not out of pocket, and everything's all good. And these insurance companies that have got shareholders are saying, whoa, a lot of them are going to be underwater if they've got to pay for all this. Okay, so individual companies themselves, we've spoken about the number of zombie companies. Now, this is before everything that's currently happening with the oil wars, the economy that's going to have to go into quarantine. So zombie companies are underwater. They're going to have to restructure their debt. There's going to be a lot of bailouts, none more so than the energy sector. Again, we're going to discuss that in a lot of detail in that interview next week. $140 billion of bonds are going to have to be downgraded to junk debt, and that is going to cause more of a cascade of selling, just like we saw towards the end of last week. Who's going to be hardest hit? Airlines, casinos, hotels. These are the sort of people that do have to issue a lot of that debt. They're the guys that are going to be hardest hit from all this travel reduction and quarantine. So some of these companies are already down 60% in terms of foot traffic and whatnot. We're seeing that very clear, granular data from the restaurants as well. And well done to a few guys who have been doing your research. I've been talking about this very clearly for weeks about learning how to short. And someone, contacted me saying, they were doing their research and thinking about the fundamentals, something like American Airlines. And sure enough, this is down from $30 to under $15, so more than a 50% drop. And well done to anyone that have been shorting those markets. Or if that's not your thing and you've gone to cash, well done. If you're long-term focused and you're still not panicked, you've got to do what's right for you. But these are the options that are available for you. All the leaders are getting together for a crisis meeting. Let's see what comes of that. But at the moment, we know their response has been, cut rates, print money, handouts, all the usual things. Now, this is unique because it's a supply and demand shock. China is on the increase by some of the metrics, if you want to believe them so far. So whether or not they've got the worst of that behind them now, and that is going to help the supply side of things to some degree, but obviously a lot of countries are really dependent on all those manufactured goods from China there. Now, fear hit 1. I think this is the lowest it's ever been, and this is in terms of the stock market. So there was no doubt that people were fearful, but as a contrarian, you've got to think about, is there a reason? So if the fear gauge is at 1 and the fundamentals haven't really changed, that's when you want to be thinking about buying. But are there large structural reasons why this is such a big collapse? And I'd have to say, yes, it is. It's just now getting priced in. So look, there's a reason that they're going down. It's not the signal just to buy because there's extreme fear out there. And we're probably going to get a bounce at some point, and it could be a really big bounce if the Fed are going to inject trillions of dollars. But just be so cautious here, because we've seen big bounces in the past. Like in 1929, this is really following it to a T, and we ended up going down a long way over months and months and even years in some cases. All right, so here we see the ETF weekly flows. One of the things we've been talking about is how it's a house of cards, and it's all good when everyone is just buying. We have these passive inflows into all the ETFs, but when everyone runs for the exits, people have got to sell that run these ETFs, the components of the ETF, and that's a different market, and it might not be very liquid. So we've seen a lot of huge moves across these different ETFs that don't really mirror what they're meant to be tracking in price. Bond funds also saw a huge run to the exits as well. So people want to sit in cash, and a lot of gold purchases as well. But either way, people are just running for the exits and they want liquidity. And that is where cash becomes king. Liquidity is king. Having that plan and being ahead, because you don't want to be the last person trying to sell. Fed have fired their $1.5 trillion bazooka. So it started off with the promise of lifting the repo operations. Then it was 500 billion. The next day it was another 500. And finally they came out and basically said, look, we're going to provide unlimited liquidity. Now, if you've been watching the channel, you'll know that I literally said, what's going to happen when all this debt and the bond markets run to the exits? The next lot of QE would have to be $1 trillion a month. I think that was my exact quote. But never did I picture that $1 trillion a day would not be enough. And what is more bullish for Bitcoin and gold and any of these hard assets when everyone is just absolutely trashing their currencies now, literally unlimited in terms of how much they're going to devalue them? That gives Bitcoin and these other assets basically unlimited upside in terms of the price. But that's all long term. We definitely need to be mindful that things are going to be rocky in this asset sell-off in the short term. In terms of having your plan, I know a lot of these exchanges have gone down. So the Robinhood app, even some of the professional stock trading apps crashed during that market move, and traders are very frustrated. A lot of the crypto exchanges, this happened to as well. At one point, all the major exchanges were down. And again, that's very frustrating. I was trading that as well at the time. John reporting here that NAB share trading platform froze as well. So look, these are the things that you don't want to be late. This is why you've got to prepare early. I spoke to the guys over at Ainsley Bullion. They said they've had one of their biggest weeks ever because everyone jokes about, holding physical gold and, it's the same price to buy the ETF. But look at these times when markets are frozen, you can't even log on. Being able to hold something yourself and being liquid, being nimble, that is absolutely worth its weight in gold. Pardon the pun. Some of these supers were going down as well. Whether or not that was just a temporary load, whereas some people were reporting they could still log on. This is a bit of a sign of how hectic things get when people panic all at once. So the price of physical gold has decoupled from paper gold. People have been speculating for years this was going to happen. Shortages at precious metals dealers globally, whether or not that's just an in-demand sort of thing and shelves are going to be restocked, I'm sure you can order ahead of time. But good to know that there's a real demand, and hopefully these sharp sell-offs we're seeing in all the ETFs, they're going to be behind us soon enough and we can start moving higher, just like we saw after the GFC. So for those of you that do want to trade this, we've still got that deal with eToro, stocks, ETFs, whether it's the metals that you want to trade in the short term or the indexes, currencies, it's all doable. We've got that $100 Bitcoin bonus. If you know what you're doing and you want to hedge, I think it is very, very reasonable to be doing so in these sort of times. Now, personally, I've been very defensive, and it was hard to watch over the past couple of years, watching these stocks go parabolic and talking about living in this upside world where I thought stocks were just going to keep going higher as long as there was more rate cuts and money printing. But that all changed a couple of weeks ago when we did that video the day before it crashed saying that the world has gone mad, and I think we've seen that blow off top. So the ASX gave back 4 years worth of gains in 2 weeks. And now I'm pretty happy, and I know plenty of you are in cash as well. And I'll be looking to put that back in. I bought Bitcoin a couple of times on Thursday and Friday for my super account for the next 10 or 20 years. I plan on buying more stocks as they continue to go lower. If property goes down, I want to buy some more property. So having those options there and not being a bear, it's not going to be Mad Max. The world's not going to end, okay? There is times to rotate into different asset classes, and timing the market is the most important thing. So if you're doing your own super, you're a very happy camper. I'm hearing stories about people that tried to run for the exits and sell, and they got told it's going to be, 10 business days before you can actually change your portfolio, and now the market's crashed. So look, I hope that hasn't happened to any of you guys. Take advantage of that free consultation with Mike and the guys over at New Brighton Capital. They'll help you get set up with gold and silver or crypto, or sit in all cash if that's what you want to do. Up to you, but take advantage of that free offer there. All right, let's get into the crypto news. A sad story here of a cool Australian company that were listed on the ASX, and because they've had so many complaints from the ASX about their crypto relations, they've said enough's enough. We're not going to even bother listing on the ASX. We're being treated so badly just for dealing with cryptocurrencies in our business. So they've left and gone overseas, and this is something I've seen happen all too often. Chase Bank have finally settled this lawsuit over their sky-high fees. So these were instances where people were being charged hundreds of dollars just to buy crypto, and Chase Bank were targeting and penalizing crypto customers. Congressman introducing a new cryptocurrency act of 2020. This is going to segregate crypto into 3 different categories of securities, cryptocurrencies, and I think digital collectibles or non-fungible tokens. Next up here, we've got the French financial regulators suggesting that a sandbox for security tokens would be a good idea. I think that's wishful thinking. The world of securities is a lot stricter than getting a sandbox around just general digital crypto assets. We have heard this week that some people are receiving letters from the ATO over misreporting or lack of reporting altogether your cryptocurrency holdings and trading. So this is a friendly reminder of up to 350 people. So the exchanges do have to hand over all that data. We've been encouraging you guys to do the right thing. Every year we do that tax video. We've got a link on our website about how to deal with the tax. All that information is there. And I hope that Louis in the background's not too loud for you guys if that is coming through the mic. He's having a bit of a sing in the shower. All right, so Craig Wright has been slammed by the judge for forging documents and perjury. I just want to show this one to you because it's clear now that the judge is aware that he's been forging all this evidence. Ripple have also found themselves in court and that ruling's gone against them, and this now has the potential to expand about whether or not XRP is a security, so one that we need to be mindful of. And we've seen the self-proclaimed CEO of Ripple abandon her support from all the trolls. So I always hate it to see when people get trolled to the point where they have to go off social media, but Tiffany Hayden there has called it quits, so I'm really sorry to hear that. She was a big supporter of XRP. The IOTA network is back up and running. One of the founders has paid everyone back out of his own pocket. There's an upgrade to that Trinity wallet, and their ledger, their Tangle, is back up and operating after being down for a month. Brave and their rewards tokens can now be redeemed on Amazon, Apple, and Netflix. Very cool to see this project going mainstream. Those of you that like to complain about the ads in the video, download the Brave browser and it will block all the ads for you. Consensus and plenty of other events, I'm sure, are going to be going virtual now for all these crypto conferences, and plenty of you are going to be working from home. So maybe that's good for things like Zoom, possibly Telegram. I know lots of you are going to be watching Netflix. Interesting to see how the internet holds up with everyone streaming Netflix across Australia during the day and around the world. So look, there are going to be opportunities. We live in a digital world, and this is something where a lot of people are going to have to get used to, working from home. Okay, so in terms of that big market crash, we saw huge amounts of liquidations and Maker got hit. So those that don't understand how the Maker system works, I've done videos on this and learning units if you're in our group. Basically, when the price of ETH falls, all that DAI stable coin is getting less and less collateral behind it. And if it falls to the point where it's not backed $1 for every dollar, then they need to liquidate these positions and they need to start to sell Maker coins now. And they're going to be doing that this week to raise an extra few $1 million to get that collateral back up. So there's been a huge rush for the DAI stablecoin because people are trying to pay down their debt, pay back their loans. And that has led to some huge rates, up to 30 or 40% in terms of what you can get for lending out stable coins at the moment. So very attractive option for some people there. And again, if you head over to our website, resources, search for DeFi, there's information on how you can do all that and earn those lending rewards. A lot of these blockchains got clogged up because of these liquidations and people trying to move Tether around on the Ethereum chain as well. This is what we need more of. Projects like Loopring that have really scaled up and can do 750 times cheaper transactions using a lot less gas. So these ZK style technologies and optimistic roll-ups, we'll talk about this in our monthly Ethereum update next week, but we really do need scaling more than ever, and it's very close on Ethereum. Coinbase and other exchanges, we still need more of them to implement SegWit. Also now doing Bitcoin batching. So as you've seen me do, for example, when we give out the $100 eToro Bitcoin bonus, we do 20 transactions at once in one transaction, and that pays a lower fee. It uses less block space. It's good to see that exchanges as well are going to be batching transactions to free up the blockchain, because once again, people that left it last minute, we're hearing horror stories of taking 24 hours to get coins off certain exchanges and whatnot. Now that was certainly the case. Sentiment, if you look at their data, they show that we saw huge amounts of coins moving to and from exchanges. So this was the largest spike or withdrawal since the peak, where we had a lot of buying and selling. So whether or not this is a good sign, to them it is. To them it shows that we've had a huge amount of withdrawals off exchanges. So that means that people have done the selling. The new buyers have come in, and obviously it's not financial advice on their part, but they did say that they certainly think that this is a positive, and it could be a great buy signal, could be the operative word there. Now, what's frustrating a lot of people with the cascade we saw in Bitcoin's price was that BitMEX didn't use and deploy any of their insurance funds, which they have for these rainy days when the exchange doesn't function as properly. And it's meant to recoup losses, but I'd argue that it should have been used in this case as well. So Binance and Deribit actually had to inject millions of dollars to stop, that cascade getting out of control. Now, BitMEX went offline instead. They did something a little bit different, and you can see the open value and the open interest, the number of positions, absolutely dropped sharply here. And this is when that liquidation engine began pushing all these orders that need to be liquidated into the order book, and there just wasn't enough volume there. So we get this huge sell-off, and that's when BitMEX just said, you know what, we've got to go offline here, because as I titled the video on Friday night, they could have taken the price of Bitcoin to zero just because of this long squeeze, this cascade of shorts, and that's really frustrating. That's where we're getting price discovery at the moment. So they waited till it came back online and fired up that engine again, and it began offloading risk. But by then we'd had more buyers come into the market. But that honestly is pretty devastating. Imagine if Bitcoin had have gone to zero. The news headlines there. You can see the order book. People have just lost confidence. Only $19 million was standing between the current price and getting down to zero there. And at the time, it was putting in $10 million liquidations at lots. So 2 more lots of liquidations would have pushed price down to zero. Crazy, crazy stuff. Now, with all this madness happening, I just want you to remember that Bitcoin has fallen 70, 80, 90% in the past plenty of times. And yes, there's a lot of global uncertainty. We could be heading for a nasty recession or something even longer, but that doesn't change the fundamentals. And the people that stood by those fundamentals and that had free capital and bought when Bitcoin was down those times, they're the people that have the greatest returns now. So nothing in life is guaranteed, but when there's blood in the streets, it is the maximum point of potential return if you still believe in the technology and its potential. And I would argue that with everything happening, monetary policy is now insane, crazier than I could have imagined, and that bullish case for Bitcoin medium to longer term has only gotten stronger. So it's going to take a while for the dust to settle. I personally have certainly hedged because there's a lot of fear out there, and if cases increase, we're going to see probably markets move lower during the week. Here we can see that gold wasn't immune to this either. A massive red week for gold, something that's not normally too volatile, moving down $200. A quick look at the markets there, plunging after we had that parabolic top. Bitcoin, just absolutely breathtaking in terms of this down move. And if we have a look at this line on the chart, we can see that this is back now and sort of touching this channel that we were in for weeks and weeks on end. So look, that along with the 200-week moving average, let's bring that up just quickly. If we can close above that, it does give us more hope. But at the moment, as much as I'd love for Bitcoin to be acting like a safe haven and a defensive asset, gold isn't, Bitcoin isn't, people are scared. There's a lot happening. If you want to stay on top of it all, guys, head over to nuggetsnews.com.au and join our group. Follow us on all our socials. I hope you're all holding up okay. This is something that we're going to look back on in history, and it is going to be remembered as one of the craziest weeks in all markets and asset classes. So I hope you've enjoyed this video. Please hit that like button, subscribe if you haven't already, share this video around, and I'll talk to you again soon. Cheers.